Despite the harsh trade warnings from President Trump, U.S. markets were soothed by Federal Reserve Chair Jay Powell. Speaking in Chicago today, Powell said the Fed could step in to steady the ship if Donald Trump's trade war begins to rock the U.S. economy. Listen in.
I'd first like to say a word about recent developments involving trade negotiations and other matters. We do not know how or when these issues will be resolved. We are closely monitoring the implications of these developments for the U.S. economic outlook, and, as always, we will act as appropriate to sustain the expansion with a strong labor market and inflation near our symmetric 2% objective.
Let me give you a look at the effect of those remarks. We've got the Dow up around 450 points. Its best day, in fact, since February. The S&P 500 climbing some 1.9% towards its biggest one-day gain since January. And the Nasdaq spiked by more than 2% back out of correction territory. So initially it was below 10% from the recent highs. Paul and Monica with me to break it all down. Paul, I'm mystified. I'm looking at the speech. We will act as appropriate to sustain the expansion. Markets throw a party.
Yeah, I think, Julia, clearly the investing community is interpreting act as appropriate as code for we will cut interest rates if the economy starts to backslide because of the effect of all these tariffs and the trade war that we are seeing. It does seem like it is perhaps a bit of an overly ebullient reaction, but for the day at least, it is a risk-on type environment again. You look at the only two stocks I checked before coming up here that were actually lower today: Verizon, which is a classic defensive yield play, and Coca-Cola, boring consumer staples. So it's everything else is higher.
Risk-on day,
exactly,
as we'd call it. You know, it's interesting. I spoke to Mohamed El-Erian of Allianz this week, and he said, look, the Fed needs to indicate that they are willing to cut rates here, because otherwise we're going to find ourselves in a situation where the market throws a tantrum again, and perhaps we go back to the kind of sell-off that we saw back in December. I mean, who's in charge here? Is it investors or is it the Federal Reserve?
Unfortunately, you could argue that going back to the Bernanke years and then it continued with Janet Yellen and now with Jerome Powell, the market does seem to have this sway over the Federal Reserve, for better or for worse. When the market throws a temper tantrum, the Fed seems to act as if there's no other way than to just placate and give the market what it wants. As a parent of young children, I know that doesn't always work because they then take advantage of you. And that is what I think investors are doing to the Fed right now.
I guess we could make the point that we're only really taking back around as much as we've lost in the last couple of sessions, for example. I mean, we saw the big tech sell-off yesterday in particular.
Right.
So if you look at it in that kind of light, then perhaps it's only taking back a little bit of what we've lost here. I mean, we're still significantly off the highs here, but still dangerous territory for the Federal Reserve here.
Yeah, I think the key is when the Fed has its next meeting and we see what those dot plots look like and what their economic projections are and what Jerome Powell says in the press conference. Is he going to signal that, yes, my bad, so to speak, we shouldn't have raised rates in December, we hear you loud and clear, here comes the rate cut to take back the December rate hike, but then we're going back on hold because hopefully maybe politicians will get their act together and we'll have a trade deal and we won't need to cut rates further. But that's going to be, I think, very interesting. I'm not so sure the Fed wants to signal that it's going to aggressively cut rates when they're already low and the job market is still healthy and we're not necessarily in recession territory yet. So that's going to be, I think, very interesting to see.
Yeah, another fine line to be walked by Jay Powell of the Federal Reserve. Paul and Monica, thank you so much for that.